make raising money a little bit of fun. So with that being said, I am going to be talking about kind of again my favorite topic. It is about raising money, but I have to do one thing first and just kind of talk about this part. Oh, the legal stuff. Oh my God, the lawyer stuff, right? It's just like, okay. So with that being said, I just wanted to warn everybody is that we are talking about raising capital, working with partners, and I am going to be sharing a lot of my experience based on years and years of experience of raising capital. But that does not discount you guys taking the time to go and talk to your lawyer. Okay. So make sure everybody understands the structure to help protect yourselves and your money partners as well. It's all about making sure that everybody understands the rules of engagement before you kind of proceed. Okay. So again, don't just say, hey, I watched Mike and Mike told me to do this and I didn't say talking about a lawyer. No, go make sure you talk to your lawyer. Really, really important. Okay. So real quickly, let's just begin with why are you guys here again? What's the main reason? So you guys have all come here. It's a Wednesday night. It's miserable outside. You guys could be watching a hockey game or recovering from your hangover from the Edmonton Oilers game yesterday, but you are here. You guys are all here. You guys are online. You guys are in Vancouver. Why are you guys here? And for those that are on the chat, type in the chat as well. So go ahead. Why are you guys here? Connections, networking, educational. I heard money. What was the other one? Raising funds. Good. And if you guys are here to raise funds, like I said, if this works, maybe not. We'll try this, something else. How's that? Like this, if you want it to start to rain like this, oh, the feeling is amazing, right? Just amazing. You want the money to rain on you, then you guys are in the right place. And we want to make this rain. That's exactly what we're trying to strive for, right? Is to help you guys try to raise money. Okay. So with that being said, you guys may be here for many, many different reasons. And for a lot of people, like show of hands again. So again, show of hands, who here is looking to raise money for their investment properties? Again, real quick, keep it high for a sec. Okay, so, and again, for you in Vancouver, same thing. We've got probably about at least 85%, somewhere in that vicinity. Okay, we'll see how everybody feels about this. Who are money partners looking to work with real estate experts in this room? Oh, there's a couple. Okay, some brave faces. Very good. Okay, be watch out, guys. So you might be getting bombarded after that, right? So, with that being said, that's the reality. A lot of people are here to learn how to raise money, and you guys are probably struggling. There might be some issues of why you are looking to raise money, and it tends to fall kind of in these two premises. One of them is this here is some of us may be in a position where we own 3, 4, or 5 properties. Okay, and then guess what the banks say? Anybody want to take a guess? No. I hate when the banks say no. Anybody like it? I can't stand it when they say no. I want them to say yes. But all of us get to that point is once you start to acquire some of your own properties on your own, the banks start to say no. Okay. And that's the reality. And then the second one that tends to happen is this. We run out of money. Okay. Who's running out of money? Anybody? There's only a couple of people that have run out of money. What are you guys were just looking for money here a few minutes ago, right? And okay, so that's kind of funny. So with that being said, in some cases you are either running out of money or you've not had money to begin with. That's some of the issues. So that's why you guys may be here today is to try to find ways to raise capital for some big investment projects. And so that's maybe some of the most frustrating part is I ran out of money. I can't qualify for mortgages anymore. There might be so many different ways. So let me kind of throw this out there to the audience a little bit and just say, why do real estate experts want to join venture? Why is that? Anybody? Throw it out. Come on. Why do real estate experts want to join venture or find money partners? What's the reasons? Other than the couple I just mentioned. Cool resources. Good one. What else? Growth. Explain that a little bit more. Scale. Good. Thank you. What else? Scale, growth, resources. Anybody else? Mutual beneficial. Okay. Good. Yep. Leverage. Very good. Right. When you say leverage, I mean that go a little bit more for me. Yeah, for sure. So leveraging where you can expedite your resources so you can use somebody else's maybe expertise, knowledge, maybe even credit, all those types of things to help facilitate that, right? What was the other one? Oh, mortgage availability. Absolutely. Again, why the banks say no to me? I hate when the banks say no. It sucks. Okay. So here's just a kind of a few things that tend to come up. You either run out of money, you don't have any money, can't qualify for mortgages, you're looking to purchase bigger properties, needing some of that extra money, and you need some extra money or debt service strength. I remember when I hit that point, even for debt service ratio, it's just like, okay, not only are you not going to qualify for this, but your debt service, Mr. Ponte, you're kind of done, right? Like you're tapped right out. Okay. The other one that was referenced earlier is sharing a little bit of experience as well, sharing knowledge, investment team, the whole thing. Okay. Or you're just trying to be the next, I hate to use the word, but I'm going to use it, Donald Trump. I don't like Donald Trump. But anyway, Donald Trump of the world, where you're trying to build your empire, scaling your business. Okay, really quickly, throw your number out. How many doors or properties do you guys want to own? What's your number? What's your magic number? 500. What was the other one? 50? 50? 100. Perfect. What was the other one? Sorry, Matt? What was it? 28. Good. Awesome. Very, very good. Right. So that's kind of really what you're trying to do is that at some point in time, if you're trying to grow your business and get really, really big, at some point in time, you're going to run out of money. And so you have to kind of understand that that's going to be the case. But before we start going into kind of the raising capital side of this aspect of this presentation, I'm going to encourage you guys to do one thing. Explore your options first. Have you fully utilized all your options before you go down this road? So again, have you taken a look? Is there still more line of credit available? Thank you, Jen. Thank you. More line of credit available within your property. Maybe it's been a while since you've actually tapped that. Maybe it's been 3 years or 4 years ago, and you still have a bunch of equity that's still there that you can utilize. Secondly, have you talked to your mortgage broker just to determine some of your options, maybe qualifying for your mortgage? Now, there's a reason why I am saying this, okay? And the reason for that is when you go down the road of working with potential joint venture partners, you are now running a business. I hope that makes sense, okay? You are now working with people's money. That means you've got a risk, you got responsibility, you got expectation, the regular reporting. You are running a business. And who's heard the term when you own one property, you run a business? I don't know if anybody's ever heard that before. Okay. I say it all the time. I don't care if it's a condo, a townhouse, whatever. When you buy a property, you have a business. But when you are working with potential money partners, now you are really truly running a business. You have responsibilities. So for those that don't like doing books, I hate doing books. I don't do books, but the reality is, doing books, like you have to do your books for your money partners. You can't shy away from that. That is a responsibility that you have to do, and that's an obligation that you have. So my comment to you guys first is before you go down the joint venturing route, make sure you have utilized or taken a look at all options before you go down that road. Now, for those of us that were referencing, I think it was like 200 properties or 500 properties, yeah, at some point in time, you're not going to be able to do that on your own. But have you taken a look at maybe your next one or your second one and see if all your options have been confirmed, all your options have been utilized first and foremost? Okay, so that's the first step. So let's kind of go down the road and say, hey, you know what? I've spent all the money that I've got, and I should maybe take a step back. Don't over leverage yourself as well. To be very clear, I'm saying utilize it, take a look at it, but don't over leverage yourself as well. Make sure you've got a happy balance. If you look at what's kind of going on in Vancouver and Toronto right now, I'm sorry, guys, sorry to my friends in Vancouver, it's kind of a scary time. You're seeing prices go dropping, and then now cash flows are real trouble, and so you're seeing also the home prices dropping, mortgage rates going up. It's kind of scary. Okay, kind of scary. So you don't want to over leverage yourself as well. So let's kind of go down the road and say, okay, I've explored all my options, Mike. I've talked to the mortgage broker. And at the end of the day, I've got no more capital to kind of utilize to do this on my own. Okay, perfect. So the next natural step for all of you guys to understand when you're raising money, okay, is really understanding your capital raise goals. Okay, who knows their why? Does anybody know what I'm saying? Why? Okay, what is when I say knows your why? What does that mean? Who wants to share? Go ahead. Keep going. Yep. What motivates you to get out of bed? Yep. What else? Keep going. What gives you that extra energy? What's that extra push to kind of keep you pushing forward? Okay, good. Anybody else want to share what their why is? Right, right. So, kind of a little bit about your goals or kind of really what the end objective is, right? Real estate investing is a vehicle, just to be clear. Okay. Nobody really, even myself, I don't want to own like 500 properties. That's not a goal. It's what the real estate is going to get me. What's the life at the end of the day? That's what I want. That's what I'm saying is what is your why? What is real estate going to get you at the end? What does that life look like for you? Okay. What's one thing somebody wants to do at the end of their why? What's like one really cool thing? Anybody? You want to help people. Keep going. Be selfish. Don't be afraid. You want to help yourself? Okay. I'm talking about being selfish. What do you guys want? Like, what do you want? There we go. He wants to travel wherever he wants to go. That's what I'm talking about. You want to go ahead. So the answer is he wants to go away 6 months twice a year. So that's very ambitious. Awesome. Now that's a why. Isn't that a why, guys? That's exactly it. Okay. But that's my point is what is your why? Get very clear, get crystal clear of what that end objective is. I hope that makes sense. You know what? A lot of real estate experts and a lot of money partners have no idea what their why is. They're just doing, but no clarity. Okay. Get clear with your why because that's the first step in raising capital. By from that point forward, then you're going to start to break things down. How many properties do I need to get me to that life goal at the very end? Okay. Is it 10 properties? Is it 20 properties? Is it short term rentals? Is it multifamily properties? What is it specifically that you are trying to purchase to get you to your why? Okay. Does that make sense, guys? Okay. Now, when you start looking at the types of properties that you are looking to purchase, now you can start doing some calculation in regards to how much money you need for down payments and reserve funds. And now you're starting to build kind of like a budget of how much capital you actually need to facilitate what your why looks like. Okay. So, what you're trying to understand, get clear with your why first, because from that point forward, it helps you kind of structure a plan of the capital that you are needing to raise to get you to that goal. Okay. So, get clear with your why. Secondly, understand what your capital raise goals and set timelines and budgets for each one of those things. What are you going to accomplish in the first year? Is it going to be 100,000? Is it 200,000? Is it 500,000? What about for year three? So it's keeping those kind of measurements and those things called KPIs, key performance indicators, in regards to getting to that main objective at the end, which is, going away 6 months, a year, twice a year, right? So that's always great. So again, what are those numbers that you need to kind of accomplish that? So that's the first step is get clear with your why. And then the other part is just determining what your capital that you are requiring for that investment. Okay. So let's kind of determine that we figure this out. Okay. We've looked at this. We know the types of segments we're looking at, the types of properties we're looking for. Now, this is going to be a little bit different for people. Okay. And what the next point is you've determined your number. And now you're going to get to a point where you're going to try to determine who your money partner avatar is. Anybody know what an avatar is? Okay, we were talking about video games earlier, so video games avatar is kind of like your profile, like your profile of an individual. Okay, so who's your ideal money partner? Who's your ideal money partner avatar? Okay, and I want to be clear, this is not the person that's got $1 million, and that's the main reason why. Okay, so he or she is your money partner just because they have $1 million. So what you're trying to determine is who they are, what they are they the right partner for you? And it's more so than just the money. Okay. So let me ask you guys, okay, let's have a little bit of a poll. So what are you we're putting our real estate investor hats on. Okay. A lot of us are investors here. Okay, that's great. What are you looking for in from a money partner? What are you guys looking for? Similar values, very good. Integrity, love it. What else? A collaborator instead of a bully. That's a good one. We're going to get to that one later. That's good. What else? So a money partner that's understanding and can help you with the solution and not just going to put some barriers up. Okay, good. What else? Trust. What else? Hands off. Give that guy a prize. That's good. Hands off, right? Not hands on. No. Okay. What else? Anybody else? Come on. Who has money? Of course he needs to have money, right? They have to have money. That's got to be an element for it for sure. Okay. Very, very good. Okay. So these are some of the things that, as a money partner, I've been doing this a long time. This is kind of some key ones that I've learned doing this for about 20 years. I'm just going to flip through this quickly so I can have them all out. Boom. Okay. So with that being said, here's a few ones. Some of the ones that are really, really big. And again, take notes, take pictures, whatever you guys need to do. But the first one is probably one of the more important ones. It's not a person that only has $50,000 to their name. That's their last $50,000. That's all they have. That is not an ideal situation. They are one incident away from you getting a phone call saying, Mike, remember that $50,000 I gave you for that property last week? Yes. Well, I just lost my job and I kind of need it back. Well, now we got a problem, right? That's going to be a little bit of an issue. So you wanting to try to find better quality individuals than somebody that's only has got like that 50 or $70,000. Quality versus quantity. Okay. The other one is ability to qualify for mortgages. Okay. I can't qualify for anymore. So you need somebody that's going to be able to help facilitate that. So you want somebody that has the ability to qualify for mortgages. Again, similar visions and goals. You're going to be married with this partner for 3 to 5 years. So do they have similar goals as you, similar vision? So it's just like a spouse. It's the same thing. Do you want to have that compatibility, that relationship? And sometimes you get those spider senses when you're talking to somebody. I don't know if anybody knows that. It's just like, well, this person's a little bit bizarre, right? A little weird, right? Same thing. Okay. So just make sure you kind of feel that person out to make sure that this is the right person for you. Um, Looking at this as a long-term investment, and it's important to clarify that with your money partner as well. Is it a 5-year term? Is it a 3-year term? What term is it? Are they looking for 1 year and you are saying 5 years? Then you are setting yourself up to fail. Okay. So making sure that everybody's on the same page together in regards to where the plan for this particular property. Okay. Passive investor, absolutely. Great comment on that. For a lot of people, we don't want people to be hands-on in our investments. We want to be the working partner. That's our job. And so somebody that's a little bit more passive in nature. Okay. Quality relationship is a big one too, is you want to have that quality. So Mario, that was very, very good. Is like you want to have that compatibility. You want to have that great relationship, and it's a quality relationship. Now, the other part that I want to talk about, and this is a little bit different for probably a lot of people, okay? And this room was a perfect example for that. So thank you guys for this. Is what's their avatar? And so when I say that is, who are these people? Like what do they do? What's their jobs? What's their occupation? What's your ideal money partner when you think about their occupation and their job? Okay. So no offense. I love this group. James, you've done a great job on all the Mogul group. Great meeting. I've enjoyed it so much already. And it's a great place to network and connect. But again, really quickly, we'll do one more time. Show of hands of real estate investors that are looking for money real quick, real high. Okay. Okay. Everybody see the room? Everybody take a real quick look. Okay. Pretty hot lots, right? Now let's have some fun. Money partners, put your hands up. Is the number about the same? What do you guys think? So we have about 4 or 5 money partners here. Okay. That's my point is when you're going into kind of social media and events like this, you're surrounding yourself with other real estate investors, which is fantastic. And you're getting to connect with other people. But is that the right place to try to find money partners? And so this is where I want you guys to think things a little bit differently. And I am sharing based on my experiences. Okay. So don't you guys get too anxious writing things down really fast, but you might be. So I'll share with you what my avatar is. They're dentists, doctors, and chiropractors. I said don't write them down, but so dentists, doctors, and chiropractors. So are you going to see a lot of doctors, dentists, and chiropractors here? Maybe, maybe not. Okay. But what if you went to a doctor's meetup or a chiropractor's meetup or a doctor's Facebook group or a chiropractor's Facebook group or a convention with doctors? Chances are the numbers that we have here will be reversed. Make sense? There'll be a lot more money partners, not as many real estate investors. So I always challenge you guys, who is your money partner avatar? Who are the people that you are trying to target and spending your time and energy and focus on the right people? I hope that makes sense for everybody. Okay. So it's about trying to determine who they are and then spending and networking with those people in that or in their arena, because that's where the money actually is. Okay. So let me ask you guys, where do you find joint venture partners just in general terms? Where are they? Everywhere. Excellent answer. Okay. And when I say everywhere, I mean everywhere. Okay. They are literally everywhere. Okay. Yes, sir. Yep. Plane next seat. Okay. You want to have a really funny? I got a one that just happened on my ride up here. So you want to have a little fun with this one. So I took an Uber from my house to the airplane. The comment was, "What do you do for a living?" Told them, "I've been interested in investing in a multifamily in Edmonton by chance. And I've just been so scared. I've got the money, but I don't know what to do. Here's my card." Right? So it's amazing by just having some dialogue and discussion. The money can be everywhere, right? So seminars exactly like this, workshops, family members, friends, church groups, all of these places can be great. So share a kind of quick story. When I first started learning how to raise money, or just at the beginning stages, it was at an event exactly like this, exactly like this. I sat beside one of my ideal avatars. He was a dentist. Coincidence, right? It's just a coincidence. Sat down, we talked. He owns over 20 properties with me, and he's been my investor for over 17 years now. Okay. And we still continue to do business over and over and over again. So, again, network. You guys are all here. You guys are all in Vancouver networking and connecting with people. It's amazing. And this is the right thing to be doing. And can you continue to socialize? Money is everywhere. It is absolutely everywhere. But I ask you guys to be a little bit more focused. Okay. Think about the area, think about the occupation, think about what you're looking for. So the reason why I choose dentists, they're busy, they have lots of time. Sorry, they're busy, they have lots of money, okay, lots of money. And they just really are looking for a good return on their investment. And when you build good relationships with them, man, they're just fantastic. Okay. And again, with that avatar, like again, going to the dentist conferences worked like amazing. So going out to their arena, not necessarily expecting them to be coming to your arena. Okay. So let's kind of determine that we have figured out the avatar that we want. Okay. The right avatar. And now we're trying to determine who your customer is. Okay. So can we ask everybody real quickly to put your money partner hat on. Okay. So I want you to get kind of to the mindset of a money partner and what they're looking for. Okay. So, and a lot of real estate experts have a lot of issue with this. Okay. Especially they're just who's getting started raising money. Anybody here that's just getting started raising money? Okay. So for some of you guys, you may be in a position where you're just like, you know what? They've got all this money. What do they need me for? Okay, since they have all this money. But there is a need, and we're going to get into this right now. It's like there is a need for people money partners looking for real estate experts. Okay. So let me ask you, why do money partners want to joint venture with real estate experts? It's a question. Go ahead. And for those that are on the chat or are watching this live, put it in the chat. Keep engaging for sure. Why do money partners want to partner with real estate experts? Anybody? Sorry. They don't have time. Great. What else? Higher return than what they can do themselves. Safer return. Expertise. Okay. What else? It's passive for them. Very good. Excellent. What else? Leverage. When you say leverage, what does that mean? So they can put the money in. Oh, I see. So you're leveraging other people, a combination of money to do bigger assets. So multiple different. Very good. What else? Anybody else? You can see monthly income. Okay. Diversify. So maybe doing something a little bit bigger, kind of was what was referenced as well here. Perfect. Those are all very, very good answers and all right. Okay. Now, for money partners, a lot of people think this, especially when they're first getting started. They're just like, you know what? They've got all the money. What do they need me for? Why do they need me? And this is a big boulder, big boulder stopping money, our real estate experts from continuing to raise money because of this mindset, which is not true. Okay. So for money partners, they got equity within their home in a lot of cases. They have the capacity to borrow for mortgages. They have a drive to improve their financial future, no different than us. We're all striving for the same exact thing. But this is some of the stuff that they're lacking. They don't have any experience or knowledge in real estate. They don't have an understanding of the real estate market whatsoever. You know, some great stats, great information that you guys all learned today about Edmonton. Yes, they're not here. You guys are here. You are learning. Okay. Other things that they have is a network of people to help them purchase as part of an investment team. Okay. It's amazing that people, and I'm sorry, I didn't get your name too as well, the electrician, right? It's just the same thing. It's just amazing the connections that you can kind of make and you're building and expanding your investment team. Access to quality investment deals. Okay. Adrian was bringing you guys opportunities here today. Okay. And last but not least, one of the big things is they just don't have the time. Okay. You guys are all committing time, energy, effort to kind of do this. And that's why money partners are actually looking for real estate experts. Okay. But there's one real big reason why money partners want to partner with real estate experts. Anybody want to take one guess? There's one thing that's holding them back. Say that again. The investor's going to take care of their money. They know that they're going to make money out of that property versus them. Okay. Good. Anybody else? What's the main reason why money partners want to partner with real estate experts? A big one. Boom. Fear. Okay. Number one, fear. Okay. The reason why most money partners want to work with real estate experts is they're scared, extremely scared. Okay. They're scared to lose money. They're scared that they don't know what they're doing. And that's a valid perspective. Okay. So again, money partners need us, real estate experts, no different than we need them. There is a combination of the two. Okay. So I always like to use kind of an analogy. Why money partners want a joint venture. Okay. Think about skydiving. I have no interest in this, by the way. That's just not just that I have plummeting to my death. This is not something that really appeals to me. But truthfully, think about an individual that wants to go skydiving. It's like jump on the plane and jump out. And that's pretty much it. So, you know, just imagine the fear that kind of comes along with all of that. And so, yes, you know, I want to jump out of a plane. I want to do this by myself. Sounds like a fun experience, but I don't know when to pull the cord. When do I pull this cord? Right. And that's where the fear factor comes in. And real estate and money partners are exactly the same way. They don't know when to pull the cord, they don't know what they're doing, but they can have a very positive experience if they brought somebody along. Okay. And with that experience, they're going to be able, like this individual is jumping out of a plane. This individual is going to have a backup. This person is going to say, pull the cord now. This is the time to pull the cord. Okay. And as a real estate expert, what you are doing is you're the person behind this diver supporting them because you know what you're doing. Okay. That's why money partners want to join venture. They want to have a positive experience and they want to leverage your knowledge to have a very effective experience. Does that make sense, guys? Okay. So money partners, and I want to be clear, money partners need us. They really, really do. Okay. Now, the other thing that tends to happen is let's kind of go through the process is that we've determined the avatar, we've determined that there's a need. And one of the other issues that I tend to find with real estate experts is they don't know what they're selling. Okay. They have no idea what they're selling. Okay. So let's have a little bit of fun. I'm being generous today. All of you guys are going to get $500,000. How's that sound? Did you guys hear what I just said? I gave you guys $500,000 each. Okay, let's try it one more time. I just gave you $500,000 each. There we go. There we go. The bad news is Mike Ponte dollar bucks, so that doesn't really count for much. But anyway, my point is the $500,000. I want you guys to think about you getting $500,000. Okay. And what I want you, but the one little trick to this is you have to invest with somebody else. Okay, so I want you to think about this. You've just been given $500,000, but now you've got to utilize that money to give to somebody else to invest. Okay. For those that got a pen and paper, not pull up your phones. And I want you guys to write a quick little list. It's going to take 10 seconds. And for those that are watching as well, what I want you guys to think about is what money partners are looking for in a real estate expert. So you've just been given 500 grand. What are some of your most important criteria that you are looking for in a real estate expert? Just wait a second. So write it down, put it in your notes. Let's just have a little fun with this. Okay. It's a little bit of an experiment. What do as a money partner, you're a money partner now. What are you looking for in a real estate expert? Just throw it all out. Guys that are watching or on chat, write it in your notes, write them all down. Okay. What are you looking for? We'll take 10 more seconds. Okay. Look at your list. What's really, really important before you give that $500,000 to that person? Okay. Perfect. Okay. We're going to end it quick. I want you to look at your list and rate 1, 2, and 3 of most importance. What's your number one? Whoa. Number 1, number 2, and number 3. Hold on. Okay. Okay. So let's go through this. What's your number 1? Start shooting them out. Experience, trust, integrity, clear plan, return on investment. What was the other one? Confidence. Very good. Number 1. Good. Experience. Knowledge. Good. All of these are really good. Anybody else? Strong why? Good. Excellent. Very good. Okay. What's everybody's number 2 on the list? Reliable. Trust. Communication. Very good. Excellent, guys. Track record. Good. What was the other one? Confidence. I think that was mentioned earlier. Very good. Yes, sir. Energy. Oh, good. Excellent. Yeah, no kidding. he, does, he, he was referencing, for those that are watching, he doesn't have any energy, but he's hoping that his real estate expert has the energy to do it. And that's valid. Very, very good. Okay. So I've been doing this and I've been coaching students and stuff like that for over 16 years. Okay. And I've done this exercise several times. Okay. And the reason why is I want people to understand what they're selling. Okay. And this is in sequential order. Okay. Number 1, the number 1 thing that you are selling is trust. Okay. Trust. Before I give that $500,000 over to Mr. Ponte, I need to feel trustworthy that he's going to not go to Costa Rica with my money and enjoy life, right? Is that valid? Right? Makes sense. Okay. Number 2, integrity, honesty, business plan. Number 3, I think some of this stuff was all being highlighted here. Track record, credibility, management, security. They know what they're doing, minimal risk, common vision. The one that's really interesting to me is number 8. See where it falls? Return on your investment is number 8 on your list. Guess what happens? Guess what happens out there and tries to get pushed the most? And I'm sure everybody's seen this before. They've gone on social media, 20% return on your investment. There's a pro forma that's on here. The one problem is they've not taken the time to build a trusting relationship with this person. Does that make sense? Okay. What you are selling, okay, what you are selling is yourself, not physically. Okay. You're not selling yourself physically, you're selling yourself. Okay. And so what you're trying to do is really build credibility and trust and honesty. But what you're trying to really share is a little bit about your values, your mission, a little bit about yourself. So share your story. Let them have confidence in what you're actually doing. Okay. So when I work with money partners and people reach out to me, it's not because of a deal. They've reached out to me and they say, Mike, I've been watching you or following you for a long time. I'm interested in partnering with you without a deal, nothing. Once once money partners trust you 100%, doesn't matter where the property is located because they trust you 100%. If I went to my investment partners right now and said, I got a property in Tuktoyaktuk, and no offense to Tuktoyaktuk, not by any means. I'm not sure if it's a good market or not, but the reality is they would trust me 100% that they know what I'm doing to facilitate that. Okay. That's what you're selling. So when you guys are out there and you're posting, share a little bit about your investing journey. Guess what? You're here in this room today. Share a little bit about something that you've learned today. As it was referenced earlier, share a little bit about what you've learned. People are watching. They want to pay attention to what you're up to and what you're doing, some of the things that you're growing and developing because they want to be part of your journey. They want to see value in you. And then more importantly, they'll want to partner with you at some point in time. Okay. So I always kind of use this as an analogy too, is for those that are heavily on social media, which is great, and you're sharing and sharing and sharing and posting and you're communicating things that you're doing, your money partners aren't the individuals that are liking your page. They're not even the ones commenting on it. They're not doing any of that. You know what they're doing? Everybody take a guess? Watching on the sidelines. These are the creepy people. Okay. The creepy ones. Okay. I call them the invisible investor. Okay. All they're doing is sitting sideline watching until they're ready and they will reach out. Okay. They're called the invisible investors. So the more you engage, the more you share about your journey, the more you get them excited of them wanting to be part of your journey with you. Okay. That makes sense? Okay. So if there's one lesson you guys learned today, I hope it's this one. Okay. For those that are wanting to do this, there's a lot of hands wanting to raise money. Understand what you're selling. Okay. It isn't the deal. It's actually yourself. Once you get that, the world just opens up completely. Okay. So let's just say you've been able to do this and you've had a lot of success and you've learned how to do this. The next step, before you start going out there and selling yourself out in the world, again, not physically, you're out there just selling yourself and you're talking to people and connecting with other people as well. The one thing that you need to get your ducks in a row with is understanding what your business structure actually is. Okay. A lot of people just go out and start raising money and just like, well, I'll just figure it out as I kind of go along. And when I say this, it's like, what is your business structure? Okay. And it's kind of your standard type of operating procedures. It's like, sorry, let me just kind of flip through this real quick. There we go. A lot of people kind of see this, what is your structure for your business? Is it a 50-50 split? Who's qualifying for the mortgage? Who's bringing in the investment capital? Who's managing the property? Who's qualifying for the property? How is the splits working? What's the equity piece? Is it 50-50? Is it 65-35? What is it? Okay. Who's heard of the 50-50 structure in raising capital? Okay. Just so you guys know, there's 100 ways to do this. It doesn't have to be 50-50. Really isn't. I teach my students that I don't really like 50-50. It's a different type of process, to be honest with you. It's not that it's bad, especially when you first get started, but there's multiple ways of doing this. Okay. Get your chance to learn it. I don't have 2 more hours here with you guys, or else we can talk more about it. Okay. Other things, how's the cash flow going to be split? Here's another question for a lot of people that they don't think about this. 50-50 on the profit, but are you guys also sharing 50-50 on the liability? Are you prepared to stake your neck on the line for this deal? Okay. And if you're not, how are you going to present that to your money partners? Okay. The other one that's really important is knowing what your investment amount is going to be. What's a typical investment for one of your transactions? Okay. Is it 70,000, 50,000, whatever the number is, have clarity to it. Okay. So for my deals, and I do more multifamily deals, but I do it as between 75 to $150,000 is my minimum. Somebody's got $20,000 and that's all they have. The minimum 75 to $150,000. That's just what it is. What is your minimum, and what are you going and stick with that particular minimum? Okay. So I'll kind of share a story actually, and this was an interesting one. I saw this on Facebook and it just blew me away. So I saw somebody post probably about a year ago, and they were looking to raise $1 million. Okay. Minimum investment was $10,000. Okay. So $1 million they needed to raise. Minimum investment was $10,000. That's 100 money partners on one deal. Okay. Talk about a nightmare. Okay. That deal better be absolutely amazing for the amount of work and energy that you've got to put into that to make that work. Okay. So be clear with what you're looking for. Again, part of it is with your avatar and making sure you've got the right ideal individuals. It's all about the quality of the types of individuals that you're looking for, but stay true to your structure. This is your business, and be very, very clear with this. Okay. I want you guys to think about your business structure as the rules and the rules and policies of your business. I want you to stay true to this. Remember, we talked about knowing what your why is at the very end. Okay, this is your business. Don't let somebody else dictate what direction that your business is going to go in. Okay. Sorry, just bear with me here for a sec. I think I'm missing a slide here, but that's okay. I can just talk to this. So the one little thing I like to say when I teach my students this is when you're thinking about your why and your business, I want you to think about what your role is being a captain of your ship. Okay, Brian knows this because he's one of my students. He knows what I'm talking about. Okay. And for those that are watching, for some of my students, they know this. Be the captain of your ship. Whose business is this? It's our business. This is our business. Okay. This is our business. Okay. As the captain of the ship, you are directing it to get to your why. That's where you're trying to get to. In the ship, you have multiple different rowers. You have realtors, lawyers, accountants, bookkeepers. Your money partner is a rower. Okay. They are part of your team to get you to the direction that you want. Okay. If you've got one person that is not following through or is not rowing in the appropriate direction or not appropriate speed, you may be going completely off course to where you're wanting it to go. So be clear of who you're looking for, what you're looking for, especially with your money partner as well. But it has to start with structure to making sure everything is in alignment to focus, stay focused with what direction. You will get pushed. I think you mentioned this, sir, as well, as like not being bullied. And I'm not sure if that was really from a money partner's perspective, but money partners can be bullies. Okay. Know your business. This is your business. So when people ask me, is like, Mike, is your split negotiable? No, it's that simple. This is my business, and this is the direction that I'm wanting to focus and proceed with. Okay, so stay true to what you do and what your business is. Is our business as a real estate investor pretty hard sometimes? It is, right? We can be proud about that and say we're worth every single dollar. And we start to kind of look at it from this perspective. This is the real estate investor. This is the money partner's role in the venture. They bring in the capital. They're available for, can everybody see that? Receive cash flow payments. Okay. And at the end of the day, they just need to be available for updates. That doesn't sound too hard to me, right? Who wants to be a money partner here? I want to be a money partner. This is great, right? So then when you start to kind of look at the real estate expert side, it's like, okay, as a real estate expert, these are all the things I've got to do. I've got to go out and find the property, do some property analysis, worksheet, property checklist, find my investment team, tenant screening, bookkeeping, property. What else do I got on here? Prepare statements. Oh, bookkeeping. I hate that. Cash flow statements. You got to pay out all this stuff like that. And you're like, oh, see, look at all the work I've got to do, Mr. Money Partner. And it doesn't end here. It just continues on with like other updates, market analysis. You guys got to be here for meetings to learn about what's going on in Edmonton. You guys are all doing all of this stuff. This is what you do. So when they say, Matt, why do you deserve 50% of the profit? Hello, look, okay. Why do you deserve 50% of the profit, money partner? I mean, look at what you do, right? At the end of the day. But we'll accept it because we want to try to create a win-win scenario for everybody. Okay. That's what it is. Know your business, stay true to your structure, stay true to yourself. Okay. This is a hard job sometimes. The acquisition part is the easy stuff from my perspective. The hard stuff is after the fact, right? We'll talk more about that in a sec. Okay. With that being said, you know what? You've gone out, you've raised money, and you've acquired some of these, and you've acquired properties. But here's one other tip there's a few other tips I want to share with you guys is continue to be a money magnet. You want to always be raising money, always. Just because you have enough money for this deal right now, you shouldn't stop. Okay. You shouldn't stop. You may have like 5 people lined up and said, "Hey, Mike, I'm ready to invest in your next deal." Great, fantastic. I've got enough money to do it. And then I find a property and then I go back to all 5 of those people and I say, guess what? I've got a deal. Remember that money you said that you were going to give me? Bring it over. Well, I just bought a brand new Tesla and some things have happened. And all of a sudden that money kind of just slowly disappears. Okay. The reason why I say continue to raise money is that money is never, ever guaranteed. Rule of thumb, you guys can write this down if you want to. But whenever I've got a deal, I'm secured it, and I've got the money behind it, at least 10 to 15% of that capital disappears. But because I'm continuing to raise money, you're always having a backup, always an opportunity to backfill when you need it. Okay. In addition to that, life happens. Situations of people losing their jobs, people of divorce, or whatever the circumstances happen. Do you have backfill in case a situation like that happens? It's going to happen. So the reason why I say this is much more so than just going out looking for more opportunities. Obviously, that's one real big one is you want to continue to look for opportunities, but do you have enough capital to support you with your existing business today in case situations happen? Okay. Continue to be a money magnet. Continue to do this. For those that are getting started, I saw a lot of people just getting started investing in real estate. 70% of the time that you should be focusing on is raising money, not looking at deals. What's the point of looking at deals if you don't have any money? Make any sense to me, right? You got to look for money. Go look for money. As you start to kind of grow and expand your money partner business, then the reality is you're going to be able to change that to maybe 50-50, but it will max is 50-50, looking at deals and raising money. Okay. So with that being said, you've been able to be a money magnet. And guess what? You've raised money and you've started to acquire properties. Fantastic. Okay. Now, the key, and this is a real big one for everybody to understand, is creating a successful partnership. Okay. You have secured capital. I know, and who's raised money here before with money partners? Anybody? Okay, good. So everybody can kind of relate to this. I know for those that have signed like a letter of intent or raised money and they're just like, yes, I just raised $100,000. Is that a pretty good feeling when you've got that money partner saying, yeah, I'm in? Anybody want to share? So you don't get excited at all until they sign the legal documents. Very good, very good. Okay. Well, I get maybe a little more excited than you. So when I get them to sign a letter of intent, I'm like, go right. It's kind of the same feeling as acquiring a property, to be honest with you, is that same feeling, got the money, got the property, giddy up, let's do it. It's a very exciting time, right? So you have sold your vision. You have sold trust with your money partner. You've done this, and they've provided a commitment to you in regards to their role and responsibility. Now the work really begins, as I've shared before. Okay. You have to follow through with everything that you said at the very beginning before you started this venture that you're going to follow through with. Okay. So what that means is you want to make sure that you are maintaining that trusting relationship for the long term. And there's a reason why I need to reference this. Okay. So by creating a successful partnership, it's a lot of these things. Okay. You want to make sure that your money partners have clarity to the acquisition, refinance, and this is one that tends to get missed a lot, the exit strategy. Okay. What's the plan? Okay. Some people just say, I just need to buy a property with you. We'll figure it out later. Wrong. Okay. Be clear. You are building a partnership there. Okay. Budgeting. You need to have a budget and a pro forma that needs to be put into place. So then when you're doing your reviews with your money partners, you have something to benchmark yourself with. Okay. So they understand exactly how things are tracking at based on what you planned and what you sold them at the very, very beginning. Okay. The big one is communication. So important. Okay. Regular communication could be on a quarterly basis or a semi-annual basis, but schedule this with your money partner so they know in advance when you guys are going to be doing your meeting. Okay. And one that I've learned over the years, especially from a lot of other investors, is when you're sharing communication, it's always exciting to share the good news, right? Does stuff happen in real estate? That's not always great. Yeah, it does. Okay. There shouldn't be one hand that says, I've never had that situation ever happen. Everybody's had it. I'd raise both hands if I could and feet if I can, right? Truthfully. But you should be sharing the bad news as well. Okay. Some of the situations that I've seen has been horrible in some cases where money partner or real estate experts have not disclosed challenges for like a year or 2 years. Okay. So that they've been hiding it in some cases with their money partner, hoping it was kind of going away or they'll find a solution. And then all of a sudden, 2 years later or a year later, they've had to disclose this to their money partner. How's that money partner feeling about trust now? They're not feeling very good, right? But if they were upfront and honest at the very beginning, you might have been able to come up with a solution to help overcome that earlier on. Okay. Don't do this. Okay. So that's my advice is share the good and the bad. It's okay. You know what? You have to talk this thing through. The key is partnership. You guys are partners together in this relationship for success. Okay. Stay committed, but also flexible. And when I say that is stay committed to what your term is. So when you're saying it's a 5-year term with your plan, and then all of a sudden you change it to like 10 years, not so good. But at the same time, you have to maybe be flexible from time to time. Do you have a backup plan in case things change? We've been in Alberta. I've been investing in Alberta for a very long time. Have we ridden quite a roller coaster ride in Edmonton and Alberta for the last 15 years? I don't know. What do you think? It's been up and down. It's just been like an interesting roller coaster ride, to be honest. Sometimes we need to sell early. Okay. Sometimes the market needs to change. The markets change, and we need to be a little bit more flexible in our exit strategy as well. Okay. But the key thing that I want to highlight for everybody is with your successful partnership is to maintain trust. If you've got a good quality in money partner and you've maintained trust, these money partners surround themselves with other people of similar stature, similar nature, more dentists, more doctors, and they will want to provide referrals to you. Okay. My business is really based on referrals. So you will not have to spend as much time working on raising capital because your money partners are actually doing it for you. But you have to maintain a good, solid relationship where those individuals can actually do more deals with you and will refer you for other money partners as well. Okay. That's how I built my business. And the work doesn't stop. You've sold them on the trust factor. You've sold them on all these things, the vision, everything that you've provided them. Now it's time for you to show what you're made of. Okay. And the most important part is maintain that credibility and trust. Remember what you're selling, because that's really, really key. Okay. So I'm going to kind of wrap up today's discussion. I hope you guys found some value to this, but just to kind of highlight on some really, really key points for you guys to remember for those that are starting to get into their money journey, raising money journey. Okay. Understand why you need joint ventures to begin with. Have you fully taken advantage of everything that is available to you today? Really question that. Have you talked to your mortgage broker? Have you looked at all of your options before you go down this road? Because you know what? This is a business now, guys. You guys are going to be treating it that way. You're going to start managing it that way once you start bringing in money partners. Okay. Determine what your cash raise goals are. So it starts with your why. What is the capital that you need to get you to your goals? It's learning what those metrics are to making sure that you're staying in alignment with that. Okay. Um, Identify who your money partner avatar. That's a big one for a lot of people because a lot of people think, I'm just going to find anybody that's got like $1 million. Be a little bit more focused. And by a little bit more focused, it will put your energy of your marketing and your meetings and your networking in the right locations. You're spending your time in the right places. Okay. Like I said, for myself, a lot of the time was around a lot of dentists and doctors and chiropractors. Okay. Are you spending your time in the right places as well? Remember what you're selling. Again, you are selling yourself. You're selling you. You're selling trust, credibility. It's all of those things. And when you understand that, then the selling process of your deals is so easy. Once you learn how to sell trust and credibility, that will make all the difference in the world. This is your business. Respect it for what it is. You've worked really hard to do this, and now you're trying to scale. Make sure somebody's not pushing you or bullying you in regards to dictating how your business needs to be run. It happens. It happened to me many years ago too. People bullying me in regards to what I need to do with my business. Okay. Let's change that a little bit. Never stop raising money. You just never know when situations are going to occur. And if you're wanting to grow and scale your business, you're going to always need to be raising money no matter what. Okay. And last but not least, healthy relationships. Just make sure you take the time to foster and build those relationships. As I shared with you with my experience with one of my partners, 16 years. I've got most of my partners long term. If I know I brought a deal, it's the same people over and over and over again. Same relationship, multiple deals. Okay. Makes the whole process a lot easier. I have no interest in 100 investors, money partners, none. I'm looking for quality investors.